All right, I brought you the very hot AI defense stock BBAI when it was below $3.80. And I predicted that this thing was likely going to shoot up above $7. It hit $8.30. This was a 130% move on this one stock in just the last 2 weeks. That's what I've done for you in the past, but I'm going to try to do it again today. I'm going to give you a new small cap, low float tech company that's very, very close to potentially popping and moving another 100%. Now, it's been on the move. These are very high risk plays. I covered BBAI along the way, always giving a stop loss. BBAI could go up another 100 or even 200% from here. You've got to use a stop loss, especially if you've come tardy to the party. You want to protect your capital. I'm going to give that for you guys. I'm going to give you this new hot play today. This is the Stocks with Josh show. I'm going to also take a very quick peek at the S&P 500, Nvidia, what is the current price range, and oh so sad Tesla. Now, Tesla, I covered it, okay, about 10 days ago after everybody else was saying that it was going to continue to climb and that this is a great tech company. After the big, beautiful breakup, I warned that Elon had done something here that was very significant by beginning to fight with the world's largest customer, the American economy, AKA through Donald Trump. It wasn't a winnable battle. And all that's happened is the stock has continued to drop as Elon has continued to unwind. I pleaded with the man. I begged him to stop. He went over to Washington and he learned what so many people before him have learned, that it's a giant toxic swamp. He got chewed up and spit out, and he should have just licked his wounds and went back to Silicon Valley and continued to grow his tech empire. But no, breaking news. He wants to start a new political party called the American Party. Well, he doesn't care about losing those government contracts, but the rest of us do. Elon won't stop, and that's why I had warned a couple weeks back that this was only going to continue to drop. I'm going to take a quick peek with you guys on that chart, and I'll show you a couple areas that you need to be watching for support. But the main show today is going to be small caps that can go up 100%. Don't drop all your money into these. Do your own due diligence. Guys, again, this is the Stocks with Josh show. Thank you for joining me. Thank you for dropping a heart, saying hi in the comment. Hit the like and hit the subscribe if you need help trading these choppy markets, learning the charts and picking hot stocks. I do it almost every day for you guys. It's always meant to be a charting class, and we're going to get into some of that again today. Thank you for joining me. Don't sleep on the Stocks with Josh Discord, because I dropped the hot play that I'm going to talk to you guys about today there first. I also drop 5 days a week, half an hour before the market opens, my trade setups, my A-plus trade setups. These are the ones that I take to make money, break of structure, breakout, breakdown. I take them every day. And I'm going to live trade with the family this coming Wednesday, but you can live trade with me or one of my crown traders 5 days a week. Don't sleep on the Stocks with Josh Discord. Come check it out. Okay, let's take a quick peek at the SPY. I want to point something out to you that's very, very important. Let's go look at that. I want to show you what is a typical breakdown scenario on the S&P 500. Obviously, we've had this incredible V-shaped recovery. We're well above the previous highs before the drop-off. I want to show you what type of signal the market gives us when it intends to break down. Right now, we have an inside candle day. Now, you're looking at weekly candles, okay? So today's red candle day shows this is called price consolidation. We have pulled back within the previous week's move, and we're consolidating. Now, whichever direction this breaks next is likely going to be the short-term move. If we break above the previous weekly high of around 625 to 26, we'll continue higher up to 630. If we break beneath the previous week low at around 616 to 617, we'll pull back. Now, let's go back in time and look at how this has worked, because you're either going to get one of two types of topping moves. The first one is going to be your inside candle day, which I just showed you. Okay, that's this one right here. Your second one is going to be an engulfing candle. These are the two type of moves we're looking for on the SPY. Back here, when we had the huge flush, which gave us the bottom of that last V, this was an engulfing candle. Yeah, the weekly red candle engulfed the top and bottom of the previous week's bullish candle. So we don't have that. Back here, we had an inside candle day, very similar to what we have right now. This candle was on the inside of the previous week's green candle. And then the next week after that gave us our direction, which was a breakdown. Back here, when we had a pivot high, we also had an engulfing candle. And back here, when we had a pivot high, we also had an engulfing candle. So I wanted to show you guys the two type of candles we're looking for a breakdown. It's either going to be an inside consolidation candle or an outside engulfing candle. Right now, we have the more bullish inside consolidation candle. The reason why I call it more bullish is because it really can break either way. It has more of a chance to break to the upside than a bearish engulfing candle that simply smothers and covers the previous week or erases the previous week's gains. Let's take a quick peek at the Nvidia chart. I want to point out something there to you, and I wanted to bring you the Nvidia chart at a quick glance because one of the reasons why this AI company that I'm talking to you about could potentially pop is this overall AI bubble that's forming and money's flowing into AI because Nvidia's hot. But also we're going to see something called rotation. I talked with you guys about this before. We're not seeing a ton of money flowing out of Nvidia yet. But if the markets have a bad macro moment led by Trump with not working out the EU trade deal, well, we could find ourselves capitulating on some bearish news. But we could also find ourselves rocketing higher on some bullish news. So we're going to be news driven. We're getting close to the deadline, and it's very possible that he'll work out a deal or simply kick the deadline down the road, which seems to be his standard operating procedure. But let's go take a quick look at the Nvidia chart because I want to show you where we could climb to, where we could fall to, what I think the current price range is. And I wanted to highlight that we're going to be dealing with rotation, money coming out of these growth stocks that have these high PEs and going into some low cap stocks where there's more opportunity for a run. All right, Nvidia. So I do believe that we can see a $180 Nvidia this year. This is the current top target of our price trend. Right now, these are weekly candles and there's absolutely nothing bearish about this setup. I want to highlight that we previously had resistance at 150. We got rejected there on a number of occasions, but recently we broke out. But I want to remind you that what often happens is once you get a breakout, what had previously been resistance now has to operate as support. And so we want to see 150 hold in the coming days. If we get any kind of correction for 180 to be a possibility, 150 has to continue to hold. So you could also view that if 150 doesn't hold and we get a close on the weekly time frame beneath 150, then the main area of support on this chart is back here at 120. And so 120 is our low end potential for a possible ultimate pullback. This might be the new pivot low, the next load zone for a long-term hold. 180 is our upward target, and 150 is what has to hold right now. Since I got the charts up, let me take you guys into Tesla real quick. And obviously, I warned every day of this particular week, I warned about Tesla's up move being over. And since those videos, we have capitulated hard from 360 all the way down to 288. Now, we are coming up on a shelf of support. I have on the background here the visual range volume profile. This is a previous area where buyers came in. You can also see this had previously been resistance for quite a while. It turned support right here. That's what gave us this huge move up. We came back and tested it. We moved up, but unfortunately, we made a lower high. And the big question is, are we getting ready to make a lower low? Well, if we do, if we break through this critical level of support at around 280, it actually opens us up for a really big move down. I want to show you this huge gap in the visual range volume profile, and it shows that support begins again back on this chart at around 250. Now, a lot of you guys are hearing me predict this down to 250, and I actually want you to pump your brakes. Right now, we had this high of 480, and we're now down at 280. We've lost a ton of value as shareholders because of what Elon is doing, but this can pass. And so we don't have that full capitulation move down to 250. I can tell you one thing I'm not doing is I'm not buying any long-term Tesla right now, and I wouldn't be incentivized to buy any until we got way closer to 250. I wanted you guys to be aware 280 is a very significant support level, that if we lose 280, it actually opens us up in 2025 to go as low as 180. Now, I know the way this works because I have people that give me feedback in the comment section. They're going to say, Josh, you said 180 and I panic sold. I'm not telling you to panic sell, but I'm having to prepare you. I would like to see Tesla consolidate between this 280, 290, and 300. I would love to see it form a bottom here and begin to build. I can't tell you exactly where it's going next. What I did tell you that was 100% accurate is that when we were at 360, I was 100% certain then that we weren't going higher. Okay. Now that we're sub 300 and we're between 280 and 300, there is a chance that we could consolidate here. And so we need to be open-minded to that. We got to see what the price action does. We got to see what the momentum does. And unfortunately, we got to see what Elon does. Let me know in the comments section if you think it's ready to move back up, or if you think the floor is going to fall out and we're going to tumble all the way down to 250. I'd love to hear from you in the comment section. Remember, bulls make money, bears make money. Hogs get slaughtered. How does a bull or bear become a hog? By staying in their position too long and never taking profits. If you're bearish and you've ridden this thing down from 360 down to 280 and you don't take profits because you think the next leg down is beginning tomorrow and it doesn't, well, this thing could pop back up and you lose a ton of your profits. So you've got to give that some consideration. All right, let's talk about some small cap opportunity. The new small cap I want you guys to put on your radar is a company called Amprius. AMPX is the ticker. This one has a lot of opportunity in defense and aerospace, and the chart's been popping, so we're going to look at this one today. Amprius Technologies is a next-gen battery company developing silicone anode lithium-ion batteries that significantly outperform traditional graphite-based cells. Their batteries offer higher energy density, which means longer battery life in a smaller form. Target customers: aerospace, drones, satellites, defense contractors, and future electronic aviation like Lockheed, Airbus, and DARPA programs. And on that note, they've already gotten the attention of the United States government. They recently got a huge grant that's allowing them to build a new factory in Colorado. And so this is what's brought some bullish eyes on the play. And it didn't help the bears that there was a very high short interest on this of around 20%. And just to explain to some of the newcomers how short interest works, when you're shorting a company, you borrow the shares, and if the stock begins to run up and you didn't get it right and you held on too long and you went from a bear to a hog, now becomes the short squeeze, and people are stuck. They're deep underwater. They've lost a ton of money, and it keeps climbing until eventually they have to panic buy it, and that causes the price to shoot up even higher. This had a huge short interest, and it's absolutely contributing to the up move. And in addition to all of that, it's got what's referred to as extremely thin float, which means there's not a lot of shares to begin with, which means that if a lot of eyes come onto a company like this, the price action can move erratically very quickly to the upside simply because there's not a lot of shares to buy, and that low liquidity leads to a violent price jump. And that's what we've seen on this stock in just the last couple weeks, but maybe more room to the upside. All right, let's take a minute and go into the charts and see what exactly is the opportunity. All right, we're looking at the weekly time frame on AMPX, and you can see that we had a neckline at around 420. This had previously been resistance. It worked like a giant cup and handle. We had made an incredible low down here to 50 cents, came back up to the neckline of $4.20, and then we came back, made the handle, came back to the neckline, and this is where the breakout story has begun. Now, more specifically, there are some bigger areas of resistance I want to point out to you on the chart. A significant area of resistance is right here at $6, and the biggest area of breakdown on the chart was back here at $8, which makes $6 and $8 two significant targets for this to have an up move. But let's talk about this completed cup and handle pattern down here. What you do to measure the expected move is to measure the difference between the neckline and the low of the cup. You put that on the breakout, and that gives us a potential move up to right around $7.50 and possibly this $8 target. So let's recap what I'm going over here. One, this is a pretty high risk play, and I'm going to get into the risk here a little bit more in a moment. Second, I think it's extremely important that the $4.20 price holds, because remember, that was the initial long-term breakout that is going to give us the move potentially higher. We're looking at weekly candles, so we basically want to stay above $4.20 throughout the course of this week, and that confirms this continued move up. And more specifically, $5 is this more important area that confirms the breakout. I also want to point out that I've got the visual range volume profile on this chart as well, and really everything above $4.20, the whole area above this price action is just thin air. There's no sellers up here camping out waiting to sell. They all pretty much capitulated back here, and then this stock largely got reaccumulated in this sideways time frame, and now we're breaking out, and now there's opportunity because of the eyes that are on this company to get back up between this $6 and $8 range. So what could bring this exciting up party to an end? 3 factors that you always need to be keeping an eye out in these types of plays, that they seem to come out of nowhere, but if you've traded as long as I have on Wall Street, then you can predict them. I'm going to lay them out for you now. The first thing that could come along on this company is a short report. Something like the Heisenberg company turns around and says, these guys are no good. They're not well run. They don't have no cash. They broke. They're falling apart. Their growth story is a lie. They're a complete fraud. Out of nowhere, it's called a hit piece. And what happens is these companies begin to ramp up and they really take off. And then it begins to attract the larger bears that are going to come in and short this back to 50 cents. So that's the first thing you need to watch out for. It could come at any time. The second thing you need to be watching out for is another thing that often brings these parties to an end, and that's dilution. It's the greed of management and the board of directors. They say that while the stock is hot, it's time to raise some capital because, like the Heisenberg report might suggest, they really are broke. They really are running out of money, and they need some more capital to secure their long-term vision. And so when the stock price is up at $4, $5, $6, $7, $8 off of 50 cents, then they use it as an opportunity to raise money. But of course, they dilute the shares, pushing the price of the shares down. The third factor that could ruin this up party is management beginning to cash out. When you begin to see upper management begin to sell the stock, then you know that they don't have great confidence in this being a true long-term winner. And so it sends a bearish message and the capitulation could begin again. Now, I wanted you to have a sober view of both BBAI and this ampx. But right now, everything in the chart when it comes to price, volume, and momentum are suggesting that this has room higher. And specifically, the number one factor that causes me to bring stocks to you guys often is volume, right? Price and momentum have to be in line. But what I'm looking for is that stealth buying. What I'm looking for is that institutional money piling in early, the money that's going to try to turn around and dump on you when you come tardy to the party. But with BBAI, we got in at the perfect time, and I think there's some room on ampx as well. Let me know what you guys think. We're going to keep an eye on it. Is this the next 100% banger that I'm bringing to this community? We will see. Let me know in the comments what you think of it. Are you going to put it on your watch list? Are you going to take a little nibble? Remember, it's got to hold $4 and it breaks out at $5. Guys, I'm going to be traveling tomorrow, so you may not get a video from me, but on Wednesday, I'll be back in my studio and I will be live trading with the family. Make sure you don't sleep on the Stocks with Josh Discord. Come check it out. I look forward to connecting with you there. Peace and blessings. Talk to you soon. Bye-bye.